All right, so today I'm going to be teaching you on support and resistance. Support and resistance is the backbone of technical analysis, as you already know. So that's why, and a whole lot of people have their own various ways of plotting support and resistance. And it's very, very crucial that you understand this topic so you can also carve out your own unique way of plotting it as the case may be. But however, we have a general rules to this thing. So, but there are two ways I'm going to show you on how to plot support and resistance levels. Okay, which this video is going to be entailed. So first, I just give you a background knowledge of what support and resistance is. So support and resistance is just like levels. There are floors like this. No, market is moving upward this way. Now we've got a low right here. This is a low, right? This is a low. This is a high right here, and we've got a lower high. We've got a higher high, and we've got a lower high right here, higher high, on and on. It keeps repeating this way, higher high, like that, and lower high. Okay, so what support and resistance is? This is a level of support. What that simply means, whenever price get back to this point, peradventure price get to this point, it will find it difficult to break this point. And whenever it finally break the point, most of the time it will retest and then shoots down. It moves significantly to the downside. So, but the point is, the more the touch of this line, the more this support line becomes so strong. Let's say, for example, it bounces it off, it goes off again, come back to bounce it up. So you have to pay close attention to this level, because whenever it finally breaks to the downside today, it's going to move very massively to the downside. So that's what support and resistance is actually. The same thing also apply to the upside. So hence, this is what we call support. This is a support. Why? If it is found at the top side, it's called resistance. Resistance. Okay. So now you can also look at it at this way. Resistance is a supply level. Supply level. Why? Support is a demand zone. Demand. Okay. What that simply means now, let's say there is high demand of goods. What happened to that goods? The price goes up. The price it goes up. Let's say there's high demand of people are demanding the goods, and it's rightly here. People are demanding the money. What happened? Price start going up. Then the suppliers start taking advantage by increasing the price, because there's high demand and there's low supply. So when the price finally hits when there are a whole lot of people now doing the business, because there is a high demand of that business, most likely a lot of people want to do that same business. So the supply will now get higher and higher. Then let's say there's excess supply. What happens when there's excess supply at the top here? The demand starts dropping. Price starts dropping. Price starts dropping. So hence, this is This is a resistance. So you can call it a supply zone, where supply meets demand. Where supply meets demand, while this is a demand zone, which is also known as support. Now note, the more the more the demand, the more price keep going up, and it come back, hits the same price, it goes up again, hits the same price, goes up again. Now remember, the more the touches, the more stronger this demand point is. The more the touches, the more stronger this resistance point is. The more traders pay attention to it, the more banks, the hedges, they pay attention to that level. So that's the basic definition of what support and resistance is. So now there are ways to draw support and resistance zones. There are ways, and today I'm going to be outlining how 2 ways to draw support and resistance zones to you. 2 ways. Number one way that is very, very common is noting the highs, the peaks, and you just drop in your A line there, noting the peaks and the troughs. When I mean the peaks like this, and the bottom peaks like that. So I'm going to do that using our traditional trend line, the common trend line that we know, these two right here, these two, that's the trend line. So that's what I'm going to be using. So now, the first move to do is select any of your favorite chart. And let me clear all these drawings that you see right here. First thing is select any of your favorite chart, or any chart you want to analyze. This work on all charts, on any pair whatsoever. So right now we are going to be using USD. For example, now we are going to 1 hour time frame. Select any chart of your choice, which is Euro USD for this example. So we'll select our time frame. Now make sure, as you're watching this video, make sure you repeat the same process and follow. You repeat the same process on your own laptop and follow as you are watching, because if you say you want to watch and come back to do it, you may not remember these processes. But right now, as you are watching, you can be practicing either on your phone or on your laptop, as the case may be. Now, the next second thing is, now let me write out the processes on our screen right here. Number one is you select any pair of your choice. Okay. So once you select any pair of your choice, then the second thing to do is you want to mark out swing highs. You want to mark out swing highs and swing lows. Or you can also call it peaks and troughs. Okay. So now let's go ahead and let's do these two processes. Then we'll be back. Let's do this. And then the second one is so now let's to mark out swing highs and swing lows. Now just look for where swing highs. We've got swing highs right here. Pick the trend line. Just mark it like this. Leave it. Move. We've got another swing low right here to just anywhere you see swing lows and swing highs. Double tap if it's not accurate and you move it right there, and double tap again to remove that edit function. Here's another swing high again. Double tap to move it to make it accurate. Okay, we've got another very, very, very long one right here. You can see the more touches, the more it respects, like we've got right here. Okay, that's a very huge one. Then we have another swing low right here. Okay, I hope you're following. Then we have just another resistance right here. Then I want to spread that out to my left hand. Okay, we've got another resistance point. Okay, and we've got another strong resistance point again right here. You can see the more it touches, touch one, touch two, then touch three. Then after the final touch, drop. Remember the rule, I said the more it touches, the stronger the trend line. The stronger the level. This is a demand, this is a supply zone. So the stronger the resistance. So you can see, then we've got another one right here. You can just map it out. We've got another right here. There's a fast way of doing this if you are not so comfortable doing it this way, or because you probably not train your eyes to see them. You can just turn this chart from the candle, turn it to line chart. How to do that? To come to this bar here. Here's a line chart. You turn it to line chart. Just look for any place that there's a noise like this. Example place like this, and you drop it right here. Now let me clear this thing that is on those steps, since you've seen the steps already. So you can see, move it to tally. Okay, then we've got another one right here. Just map as many as you can to the left. Just keep doing it. Yeah, we've got another one right here. Now there's what's called turncoat. When it supports turns resistance. Here, right here, it was a support. Then when it finally broke through, it became a resistance. Tested it up, then slash to the downside. So this is what we call a turncoat. When a support becomes a resistance. All right. So we have got more on and on. So we've got a whole lot of levels right here. Okay. You can do this too. You can do this. This is a turncoat to resistance. It broke through, it came back down, tested, broke up, came, tested. You see, there is a whole lot of noise there. So traders will want to respect that price too. So I believe with line drawing, using your line chart is more simpler than using your chart. Then once you are done noting the highs and the lows, the peaks or the trough, you can just switch back to okay, which we are going to do right now. So all you need to do is, then we need to switch back to the candlesticks. Switching back, just come here, you click on the candlesticks here. Okay. So now the next thing you need to do is connect them using your horizontal line. Connect these lines using your horizontal lines. So just come, drop it right here. Now let's go to the current chart. Then you find out that this line we drop is relevant to, okay, it's not here yet. This one too, you drop it right here. You see, it tallies with this one right here. Tallies, there's something. Let me change this line to red. Let me change it to red. Let me change the horizontal line to red. Since the line we're using dotting it is magenta, so it doesn't clash. Okay, you see right here. Remember, another thing you need to know, support and resistance, they are zones. They are zones, and do not just look at them as a straight line. Look at them as zones. Okay, because it's very important. As zones, not just a line. Zone. Look at them as zone. All right. So the next thing you want to do is just keep on adding the horizontal line to connect all of them. This one should match up. Now you can see right here, it broke through right here. It came here. Went back, find a resistance at the top, right at this point. Found a resistance right here. Then after that, it drops significantly. This is a resistant point. It's also a resistant point. This is also a resistant point. Just look at them basically as a zone, You can just extend it out. Zone. This is a zone. Okay? It's a zone. It's also a zone to right here. Just like this. Now, let's move. And let me clear this drawing. You can see this horizontal line we put that right there. Even with that, we didn't see this, but you can see it still makes sense. After touching this point, it went up. Remember, always look at them as zones. Now here's another line again. Now let's drop a horizontal line right here, just right here, so that it can be relevant to the chart. You can see one touch, second touch, third, fourth, fifth. And prior to that, we've got another one right here. So chances are that when in the future, chances are that there was one we dropped here, right? I moved it mistakenly. You can see it also made sense here. It also made sense. Now let me just extend it, or let me extend it out with my shapes. Come to triangle and draw it as zone. We fill the background. Okay. You can extend it as long to the future price, as long as you wish. Just so you be very careful. Whenever price comes to that level, you know how to react. Now, right now, you can see that we are at the resistance. Okay, there's a test and it's dropping again. So now what action would you take? Now I'll tell you how to trade. I will tell you how to trade this as we move on. Just pick it from here. Look at it as a zone. That's why I'm painting it green, so that you just view it more like a zone. View it more like zone. View it more like zone. So with that done, okay, we've got others like this one. So we've got here. So let's draw another zone on it. If you're not comfortable with this style, I have another one I'm still going to show you. You can just drop it as zone right there. Come here, drop another one, just like that. It's very, very simple. Do not complicate it. Now we've got another line here. That line there. Then just insert your zone. Make sure you view it as a zone. And you can spread it out soon. Spread it. You can see here, still affected this point and still reacted at this point. Just like that, and it keeps going. So that level is a strong zone. It's a strong zone. You can see when price got here, rejection drops to this side, rejection, drop down, rejection. So now, after you've put your zone, you can actually delete. After you put your zone, you can actually delete anyone you want to delete. I just want to remove that line. Okay. So like that. These are zones. Zone. You can see another one right here. You can paint it. Let's paint that. You can see, you just paint that. That's it. That's it. That's it. Tested. See that this line we drew very far back when we started. We never saw this back as at that time. You can see it's still very, very relevant. When it got here, as a support, moved back up, was able to break through. It retested the same line, then palm to the downside, broke through this point, came back, tested it, went up, broke through, came down. Just like that. You can just keep back testing and looking at it. Once you're able to draw it that way, that's it. That's how to draw a very respectable support and resistance line. First point, you pick a chart of your choice. Now let me enumerate it again. Number one, select a chart of your choice, any chart of your choice. And the second thing is you've got to mark out the highs and lows. Okay. Then the third thing is you connect them. Connect it with the horizontal line. And you have to now adjust it and also adjust such that it's reasonable to the zones. Okay. So that you remember, the more it touches, the more stronger that zone is, the support and resistance line. So you have to adjust it like what we did earlier. You have to adjust then. That's the support and resistance. You could as well also switch it to line. At this stage, you can as well switch it to line chart. You could either use your line chart or candlesticks. Okay, yeah, your line chart or candlestick. Any one of them just work better, depending on the one you prefer. So these are the simple 3 steps to plot a very good support resistance, just like the one we've got right here. So you can just make sure you take out the whole day, just do this one once and save it on your chart. When you come back, this is how you're going to meet it. Or you could actually use TradingView. If you use TradingView automatically save all your markups, so you don't have to be doing it over and over again. Once you're able to do this one, it's once and for all. So whenever price is approaching this zone, just be prepared. Okay, upon a break, you trade long, or you wait for a break, retest, trade. Now, you break back to downside, retest, then to another side. So that's how you trade it. So there's another thing you could also merge with this, so that it can be very, very, very profitable in the long run. It can make more sense. You could either add 1 indicator or 2 indicators, or you could also add trend line, using trend line to trade this. Now, the second best way to draw support and resistance is using psychological levels, of plotting support and resistance, rather, is using psychological levels. Now, let me show you how to use psychological levels. I'll just get rid of all these. Okay, let me start from the bottom. Now, using psychological levels is very simple. Now, what's psychological levels? Psychological levels are round up numbers that banks, hedges, they pay close attention to those levels. Now, psychological levels, like, they're just like 5, you counting your normal figures like 5, 10, 15, but you're paying close attention to the significant ones like 5, 10, 15, 20, 25, 30, 35, 40, 45. Now, we've got main psychological level and sub-psychological levels. Main psychological levels are like 10, 20, 30, 40, 50, 60, on and on. We've got main, psychological levels, and we've got sub are the one with 5, with the ones with 5. Okay. I know a lot of people may want to go with this because it's so simple, because I also use it a lot. If you check my chart on GBP USD, you definitely see that right there. You can see all those lines. These are what I use, psychological level. You can see right here, I've got 1.33500, 1.3300, 1.32500, 1.3200, like that. Sorry, 1.32,000, stuff like that. So now let me just show you how I came about those numbers and how you too can as well replicate it on your own personal chart. So we have got main psychological levels and we've got sub-psychological levels. Now, example of main psychological levels is like now on Euro USD, the current price right here is 1.1044. Okay, now so a main psychological level here would definitely be 1.10000. That's a main psychological level. How many zeros? 1, 2, 3, 4. 1, 2, 3, 4. Yeah. So 1.100. Why? An example of a sub-psychological level would be 1.0513. Yes, that's the sub-psychological level. It keeps going on and on. So I just believe you understand what this means. So now let's go ahead. So the first step you are going to do is, now since you already understand what main psychological level is and sub-psychological levels are, now let's just go straight. Now the next thing is you jump straight, unlike the other example. Now you just jump straight to the horizontal line and start putting in those lines with those in those levels. Now the next one that is relevant, now you just try as much as possible to keep it so simple. You can just drop a few on your chart and not necessarily you just keep a whole lot of them. You may not be able to get the line by dragging it. Just double click on it and you right click, go to horizontal line properties and come to parameters. Then you change it to the price you want it to jump to, 1.100, like that. So it jumps there. Then you double click on it. You can see there's one rectangular thing at the edge. Just double click on it so it can go. That stuff simply means you can edit it so it doesn't move around. Now you can see I can slide over it. It will not move around. But with that stuff right there, it's definitely going to be moving around. You understand? So just go there again, change it, and that's the 1.1. Finish. So I double click on it. So that box at the right end will leave. Okay. So now that's the main psychological level. So first, let's just add main psychological levels. Then we'll come back to our sub-psychological levels. Now, for this, now we are going up. What would be the next psychological level? Next psychological level. Now, note the difference to know a psychological level is going to be by pip. So the pip different from a main psychological level to another main psychological level is 100 pips. 100 pip. Right? You just calculate it by doing this. So the next psychological level would be 1.1100, right? 1.1100. So you just take it right here, 1.11. Okay. Once you get here, go to properties and change it manually. 1.1100, right? You click on it, then you untoggle that rectangular stuff. So that's how you just continue doing it on and on. So the next one will be 1.12, like that. So you can just go to a higher frame so you can see it more simply. So these are main psychological levels. Now let me just go ahead and add 3 more so you understand how we derive this thing. So the next one will be 1.13. Now to cross-check whether you're correct or not, all you need to do is to bring out your crosshair by Control F here on your PC, Control F, or you can manually calculate it using your own calculator. On PC, just type Control F, or you can press this crosshair sign right here. If you click on it, this stuff will still come out to calculate pips. So you move from here, glide to this side. So it's 100 pips. If it's 100 pips, just know you're correct. Okay, and just to be round up on number. You can see the way it just makes sense. Now let me add one more. Which is going to be 1.14. Now this is for the main psychological levels, 14. You can see there's no 5 at the back. Now to bring up a sub, just be adding 5 at the back, 5 at the back, 5 at the back. Now let's go. It's going to be, now to add for a main at this point, it's going to be 1.135. 1.135. And the distance from a main to sub-psychological level is 50 pips. That's the idea. 1.13500. Now you can see just by merely adding that, your chart looks very fine and very organized and neat, right? 1.2500. The next one is going to be 1.15 rather, 1.115. All right. So you want to add the last one. Just make sure you just do it to the one that is relevant to the chart at hand, the current chart at hand. It's not necessary you fill this whole thing. Oh, sorry, brother. Not necessarily you fill it or your chart with these lines, just to make sure it's just the one that is relevant. Now, how does this thing affect our chart? How do we make money with this stuff? Now you can see we didn't really look at the chart. We didn't really look at the price before plotting this thing. We just dropped them randomly because those are random price that we know that market makers, the big guys, the banks, the hedges, they pay close attention to them. Now look at how it affects your price. Okay, you can see at this point how price neatly kisses off 1.1400, then it drops, retested, then drop down to the other side. Okay, so now it successfully broke 1.13 and also retested, it dropped to downside. You can see how it's holding from zone to zone, Also, you also have to look at this thing in form of zone. Okay, you also have to look at it in form of zone. I already showed you how to draw zones, so I won't be doing it much. Just look at it in form of zone too. So I believe this one is more simpler for you to understand because this is what I personally used to. I don't want to just stress myself over drawing that. So I just use psychological levels and they hold very well. So all I wait to do is I just wait for price to get to psychological levels, then I take actions. You can see how price has been touching this level and it's been reacting, right? So all I do majorly, I target 50 pips. So from this point, I just know I measure with my TDI Traders Dynamic Index. If you're interested in that indicator, I'm willing to share with you. And I'm also making a video on my YouTube channel on how to use Traders Dynamic Index, which I'll be sharing with you based on your request. So upon kissing off 1.1400, what happened? Price came down 50 pips. Okay. Now let's say you catch up 50 pips using just 1.0, that would have been $500 in your pocket. $500. Or let's say you broke even and you waited for that more 100 pip, that would be $1,000 in your pocket, right? And it came down more 150, okay, and more. So just like that, that's how just using psychological levels you make money trading in financial market. Now, can you see how this level held so nicely? You can see this level held so nicely. Yeah, nice point right there. Came here, pin right, immediately touched this 1.1500. It dropped significantly. So that's how you just keep using this psychological. Now let's move far back in price, so you know it's not just happening to the current chart. Can you see this? Can you see this, guys? Can you see this? It's happening almost every time. Once to get to this, as a resistance, price drops significantly. Here, acts as a support. This 1.1200. Now pay close attention to main psychological levels more, because all traders pay attention to that. Okay, once you get to this point, it is deemed as excessive supply. So what happens at excessive supply? It drops. Now I'm going to explain the psychology behind the psychological levels. Psychology behind it is normally whenever you go to the market, you want to buy price at a random number or at a random figure whenever the person that is selling to you asks you, tells you the actual price. For example, let's say you go to a car dealership shop and you are told the worth of a Camry 2018 is, for example, I don't know the price. I just use an example of 1.7. You likely want to negotiate 1.5, right? Okay. You want to negotiate to 1.5 or 1.250 or even 1 million, as the case may be. But now let me ask you, why didn't you negotiate to like 1.6? You wouldn't want to negotiate to 1.6 because your mind would be fixated on a random price, a random figure. Same thing also goes to the people that go to the market. Yeah. Okay, when you go to the market, let's say, for example, a particular fish is priced at 70 naira. The next place you likely take it to is 50 naira, right? Okay, so that's how psychological level works. So also, traders will also want to wait for price to get to a certain random number before they will want to get into the trade, before they will want to buy. They want price to get to a certain random figure. Like, can you just see how nicely this candle just kisses up 1.13 before it started moving up? Now, if you're able to catch these nifty entries, trust me, you're going to make massive money, a whole lot of money in Forex market. So you can see these levels, they keep touching. So that's that on support and resistance. So if you ever want to know how to trade, adding other indicator, all you need to do is just watch my other videos, or let me just give you a slight introduction to that. Now let me bring up the Trader Dynamic Index. Just drop it. Now all you need to do is watch for psychological level. Upon price touching psychological level, wait for the cross of this green and red line. Now here's an example. Now let me drop off a line right here. Let's use this one as an example. Okay. So you can see price cases 1.1400, right? So upon this, you still wait, be patient, a little bit of patience, wait for the green to cross the red to the downside and facing down, and make sure it is outside. It is close to 68. You can see on this TDI we have got 68. This price measures overbought, while 32 measures oversold. But I don't really use the overbought and oversold thingy. But just pay close attention to these levels though. 68 levels, they are crucial on this TDI, and 32 levels, they are also very crucial. So make sure price crosses the green line is what we call sentimental line, while the red line is called signal line. So the sentimental line crosses the signal line for a trade to the downside. And also put into place, it must touch any of the main psychological level or sub-psychological level before you pick any trade. Before you take any trade, make sure it's on main psychological level or sub-psychological level. And you could also use RSI for this trade. Now let me bring up RSI, that is relative strength index. I've also taught on how to use relative strength index on my previous videos. You can as well watch that. So for the purpose of this lesson, we are going to be changing our parameter RSI period to 7. Okay. Now I want to move it to 1 hour chart. 1 hour. Okay. So now let's use this example. Let's use this for example. As an example right here. Boom. Okay. Remember RSI for overbought level is 70 and oversold is 30. I like to add one more line, which is 50, 50, 50, 50. Now remember, the full meaning of RSI is relative strength index. I do not really use it the way other people use this RSI. What I use my RSI to do, I use it to measure strength in the forex market. It's for strength. It's a strength meter. So why do I say so? Why is it a strength meter? How do I do that? So whenever this blue line is above 50, it's deemed to be an uptrend. It is deemed to be an uptrend. Once it's beneath 50, it is deemed to be a downtrend. Now, let me show you what I mean by that. So now let's go started from where this trend started from. You can see here, price went below 50, right? 50 right here. Just pay a close attention to this point, okay, on my RSI. And while you also look at the chart, just pay to the horizontal axis and the vertical axis, okay? So when price got to this point, it crosses 50, it retested the 50 line, then it started trending to the downside. Now, to me, I would deem it to be a downtrend. Then it went back up, just shortly between 70 and 30. Now it's consolidating, just as you can see right here, that price was actually consolidating as at this moment, right? Now let me delete this zone so that you can see the lines carefully. Clearly rather, you can see there's a consolidation right there. So all I will just do is this consolidation, I'll block it out, because remember I told you I don't trade consolidation, but there are some other people that trade consolidation. It's good for them. They know how to trade it. There is other strategies for trading consolidation. You can actually scalp. You buy here, you sell here, like that. You sell here, you buy here, sell here, like that. Sell here, you buy here. Okay, that's another strategy. But just pay close attention to this. Now, when this blue line is trending below 50, I deem it as a downtrend. Once it's trending, just go check it. Anytime it's trending more, you can see, though it goes that side. So yeah, sometimes that it will just go that side, 50 up a little. That doesn't mean it's an uptrend. It's still a downtrend, but you pay close attention to more sales than buys. Pay close attention to more sales than buy. Now, how do you use this in relation to I just moved this mistakenly. Probably I didn't untoggle it. And let me correct that. That's one. Let me untoggle that again. So how do I use this? When price gets to 70 and it crosses down, like here, it gets to 70 and it headed back down to downside, then I'll start selling. Now make sure first your price is at psychological level. And let me show you one more example. Right here, price got to 70, right? It's on psychological level, right? Okay. I'll wait for price to go above 70. Comes below 70 rather. It goes above 70 first and comes below 70, right? Price got above 70 and it's also on the psychological level and it goes below 70 line. This is 70 line. Then upon a candle closing below this 70 line, I strike. I enter in for a buy order. A sell order rather. I enter in for a sell order. So probably I'll be entering in for a sell order at this candle, at the close of this candle, this red candle. That's where I'll be entering now. Let's align it to what we've got right here. You can see, let me move it back a little. I'll be entering at the close of this candle, because upon the close outside the 70 line, that's how I'll be entering. So, but I personally, I do not use RSI. I use Trader Dynamic Index. I'm just trying to tell you that you could actually use any indicator with support and resistance. Any indicator work well. Any indicator just work perfectly well. Now, let me show you one more way to draw support and resistance. Another way to draw support and resistance is using moving averages. Another thing you could also see on this my chart is using moving average. You can see moving average. So there's what we call dynamic support and resistance. Dynamic support and resistance, and that can be achieved using moving averages. So moving averages like 200 moving average is a very common one. Banks and hedges, they pay close attention to those moving averages too. So you could also take advantage of that. So the moving average I'll be using is I'll be using 200, 50, and 800, because a whole lot of people use that. A whole lot of traders, they use that, and big traders too, they also use that. So you just go to insert, go to indicator, and look for trend. Then you can get moving average. So 800, I'll make 800 to be red. Exponential, I like to use exponential. 800 red. Then I'll repeat the same process, but this time around I'm going to change it to 200, and 200 is going to be black. It's going to be black. Nah. Let me go look for that and change it. Black here. Okay. Then I'll add one more, which is 50. Which is 50. Then I'll change it 50 to blue. Color to blue. All right. So now you can see it's act as support, as a dynamic support and resistance. What I mean by dynamic support, unlike the other ones that we've had, they are always static. They're in one place. It doesn't change. This one goes with price, whereas the horizontal ones we drew earlier, price meets them at where they are. They don't change. But this one changes based on price. Now, how does moving average come about? If I say 50 moving average, that simply means the 50 last candles price, closing price, were summed together and divided by 50. So the answer, whatsoever is derived at, they look for it in chart and they drop a dot right there. I hope you understand. That's how moving average came about. The summation, moving average is the summation of the period. Now this is 50 moving average. They took last 50 candles. Let's go to the recent chart. Now they calculate by taking 1, 2, 3, 4, 50 last 50 candles. They sum the closing prices up, divided by 50. That's the mean price. Then they look for that same price in the chart, and then they drop a line. So that line is further connected by this. That dot, rather, they drop a dot. That dot is further connected by this line that you see right here. That's how moving average come about. So for 200, last 200 candles. For 800, last 800 candles. And this is exponential, right? Okay. So you can see whenever price got to this 200 line, what happened? It resisted. It served as a resistance. Then it drops back down. You see, when price touched this 800 resistance, it dropped back down. Here, there was price accumulation. Whenever there's accumulation, whenever all of them meet together and it's flat, is what we call consolidation. Price will consolidate. It will consolidate. You can just watch this video over and over again so you can understand it. All right. I know I'm rushing a little bit. Okay. So you see that when price gets here, it makes a whole lot of noise and you drop. So it basically acts as support and resistance dynamically. It's moving with the price. You can see when it's trending, it goes up, comes back to touch off the 200, it bounces it up again, comes back, touches the 200 and the 800 at the same time, bounces it up, touches the 50, bounces it up, touches the 50, bounces it up, and it was able to break through. Now, what was support before now became a resistance. It tested, broke through, tested, drop, broke, tested again, break, tested this line, break, like that. That's how it works. So you can backtest it on and on. It works perfectly well. Each of the time you can also use it as support and resistance. Now, the next one I also want to be showing you to use as support and resistance is Fibonacci. Because that's why I use Fibonacci levels as support and resistance. Now, how do I mean? Now, let's say, now remember, Fibonacci works best in a trending market, not in a consolidating market. Now, you have to put that at the back of your mind because it's very, very crucial you understand that it works best in a trending market only. Now, let's look for Fibonacci retracement tool. Now, this is a trending market, right? How do I know it's a trending market? Because we are having consecutive highs, low, high, lower high, higher high, lower high, higher high. That's how I know it's a trending market. So now, how do we plot this Fibonacci? We plot the Fibonacci starting from the left-hand side to the right-hand side. Left-hand side, moving to the left-hand side. So first, we look for a trough. That is a low. This is a low, right? Then we extend it to the recent high. This is a recent high. For example, let's say we want to catch this move to the upside. Now, let's assume we are not seeing this, right? Okay. We want to catch a move to the upside. So we plot from the low, take it to the high. Then remember the golden levels. The golden levels are, I already taught you this one, 1.668. Another one is 50. These are ones I pay attention to. And the last one is 38.2. These are the levels I pay close attention to according to the level of Fibonacci sequence. Pay close attention to those levels. So now using these levels, let's look for them at this point. And we've got 618 right here, 50 and 38.2. So what that simply means is I only take big trades when price gets to 618 or 50 or 38.2. You can see when price got to 618, what happened? Bam. It touches up, it went up straight, and it came back to retest again. After retesting, it went straight up. Okay, so that's also a is a support level. Is a support level. Is a zone. Now let me delete the Fibonacci. Oops, that's a mistake. Okay, you can see it's held right here, held right here, held right here, even held here. Also came to act as a resistance, and it became a support right here too. This is a resistance. Now let me show you more example at that level. Now here we also got the 618. Now let's also bring out another Fibonacci to get another level. Now here is another. This is a low. Is a lower high rather. Then you look for the nearest high. This is a high. So you look for, now you see price immediately touches 618. What happened? It retraces back to the upside. So this is how you can also use Fibonacci as demand and supply zone. So demand and supply zone. Demand and supply zone are basically levels where price gets to and traders they react. That's just it. That's the basis of support and resistance. And I'm sure you understand that, right? Okay. If you have any question, you can always ask me. Chat me up, check the description box, chat me up on Telegram. And also you can also reach out to me on YouTube. Remember to like and subscribe to my YouTube channel. All right. Bless you.